Hey everyone, and thanks for tuning in. This video, I'm going to compare Nikola with Plug Power and answer which one is the better innovative growth stock to buy now. I'm going to compare these two on revenue, operating profit, cash flow, shareholder dilution, and valuation to answer which one is the better stock to buy. So let's get right into it. Starting with revenue, and you could see that Plug Power is further along in generating revenue with 260 million in revenue in its latest quarter. Meanwhile, Nikola with 15.36 million in revenue in its most recent quarter, having just really started ramping up production of its innovative trucks, battery electric and fuel cell trucks. And interestingly, the company issued a recall most recently of its battery electric trucks, but said that it would not impact its hydrogen fuel trucks. So that's something to keep an eye out for with Nikola to see if that hinders its revenue growth for the rest of this year. Next, I wanted to compare these two on operating income, and they're both losing a lot of money on the bottom line. That's common for young, innovative growth stocks, but what I want to see is at least progress towards profitability, and I'm not seeing that with either of these two. So Nikola has been moving, I would say roughly flat, downward, worsening its losses at negative 178 million in its most recent quarter, even though it only generated 15 million in revenue. Plug Power similarly moving in the wrong direction, 208 million in operating losses in its most recent quarter, and that was on revenue of 260 million. So they're both moving in the wrong direction in terms of operating income, but Plug Power seems to be in the better position if you compare operating losses to revenue. I also wanted to look at cash flow from operations, and in this metric, Nikola has done some work to slow down the losses in cash flow. In the most recent quarter, the losses improved to 107 million. That was up from closer to 200 million in previous quarters. Meanwhile, Plug Power just keeps heading in the wrong direction, negative 348 million in terms of cash outflow from operations. And so when I see two companies like this that are losing a lot of money on the bottom line, I like to look at shareholder dilution because this is most likely how the companies are getting money and using it and losing it is through investors. They keep going back to investors and saying, give us more money so that we can invest in our growth. Give us more money until we can sustain ourselves and be cash flow positive. And so I want to see how much they're diluting shareholders. Let's start with Plug Power here. In early 2021, they had a little over 360 million shares outstanding. That has increased to a little over 598 million shares outstanding. Nikola, meanwhile, has gone from a little over 360 million shares outstanding all the way up to 708 million shares outstanding. So much more shareholder dilution from Nikola. And they recently got approval to issue as much as 1.6 billion shares. So I would not be surprised if Nikola's shareholders continue to get diluted over the next few months and over the next few years. As management has said, they need a lot more money before they can be cash flow positive a couple of years from now. Finally, I wanted to look at valuation, and I chose to use the forward price to sales ratio because each of these two companies are losing a lot of money on the bottom line. I couldn't use price to earnings ratios. They're also negative in terms of cash flow, so I couldn't use price to free cash flow ratios. I chose to use the forward price to sales. And judging by this metric, Nikola is more expensive at a forward price to sales of 2.6, slightly more expensive than Plug Power at a forward price to sales of 2.47. Now, before I answer which one of these two innovative growth stocks is the better buy, let me remind you that these are both very risky investments. They are questionable whether or not they will ever achieve profitability on the bottom line or positive cash flow, even though they are forecasting they will eventually achieve these feats, that remains to be seen, right? So keep that in mind if you're thinking about buying either of these two. They're only for the most risk-seeking investors. Certainly, I'm not one of them. I would not be buying either of these two stocks. But if you made me choose and I had to pick one of these two, I would pick Plug Power. I like that they are further along in revenue generation, and I like that they've got near-term catalysts that could boost their profitability as they bring more of their production in-house and stop buying or lessen the buying of green hydrogen from third parties. That could improve their profitability. And so I'm more confident in their ability in achieving those profit margin targets and cash flow targets. And so if I had to pick one, I would pick Plug Power. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.